The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, we found a little bit of green on the screen across grain and livestock markets on the day Thursday, trying to find some upward momentum. Can we churn our way off these recent lows here post USDA report? I think that's a big question that a lot of folks in farm country are asking, and we're going to talk about all of that and more here today on the show with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, always good to talk with you, my friend, and yeah, I found a little green on the screen. Something positive, I think, to take away here towards the end of the week, Brian.
Yeah, you kind of hold your breath here. We went from negative this morning in the grains to positive, and we stayed positive. Not a lot. Penny and 3/4 in March corn. I know the market's been down since the end of the year, and actually since October, we're down about 80 cents in that March corn-ish. That's a lot. But unfortunately, we're lacking a stimulus. We're lacking positive news. We continue to, look for it elsewhere, and mainly on the demand side. And to look at the world's, biggest user of corn in China, and at least biggest importer. And news this week it kind of piled up. Their GDP wasn't quite as expected, and I should say news this year. They've allotted or will allow for GMO seeds and imports, and that just creates more of potential for somebody else to grow GMO corn as well. So we didn't get the positives we wanted out of that, and we're at long-term support on monthly charts. So that's definitely a challenge to the market. Beans, nice finish today, 6 to 7 higher. I still don't have a bullish story there. The weather is taking a turn for the better in South America, and the market's just concerned about demand, and the managed money that stays short uses momentum indicators, and there's still sellers. But today was a nice reversal, and hopefully a sign that the $12 area in March is going to hold.
Oh, Brian, I think about the old adage, high prices cure high prices. Well, I'll ask you this. Can low prices cure low prices? I think a lot of farmers are wondering about that in farm country right now.
Well, they do, but typically it takes a longer window of time to cure low prices. And what I mean by that is you need to develop demand markets.
Yeah.
Demand just doesn't shift all of a sudden. And when I say develop demand markets, we talked about China. China's hog herd is contracting. That's not building demand. Now, whether that's a function of higher corn prices the last year in red ink, and now that'll begin to shift, but that shift doesn't happen overnight. So unfortunately, it is something where we longer term look for the opportunity to look at demand growing and growing substantially, but we saw a trough of low prices for a long period of time. So,
I wonder, Brian,
take a look at that, and from a long-term perspective, what kind of demand can we actually build in a short period? But low prices do cure low prices. The problem is farmers have a lot of inventory this year, so that's our dilemma. So,
yeah, a lot of inventory. USDA confirmed a fair amount of that with the WASDE and all the other data that came out last Friday. I mean, as you've had a few days to sit with that data, and the market's had a few days to sit with all that data that came out here, Brian, what's your biggest takeaway from those reports here, or what has stood out to you post USDA data dump day?
Okay, so one, it's old news. The market knows it right now. The yield numbers were a surprise. The average pre-report estimate wasn't anywhere close. So it's out of the way. It confirmed that the stresses and strain of this past year's crop, good farming practices, good genetic, whatever the case, timely rains, did make for good crops. Attention quickly focuses to the southern hemisphere and production there, and there really isn't a concern story at the moment. There was up to about mid-December. So the data dump happens. You get all this information. We get the quarterly stocks. It's now behind the market. It had looked like the corn market in particular, soybeans in particular, were factoring in this idea of the potential for a less than friendly report in some capacity, whether it be less demand or more supply. It's old news. What it does, though, is it sets the tone going into next year that end users just don't have to be aggressive. We're looking at ample inventories. And that is the biggest dilemma. As I mentioned to you on many occasions, demand is often unchanged. It's the form of demand. There's no perceptive reason for an end user to jump in there. And that's what the report basically told the end user. You don't have to jump at this. And it told the speculator, you don't have to exit your short positions right now.
So I wonder here, these markets still look like they have a fair amount of carry in them, volatility fairly low in many cases. So I would have to think with markets like this, Brian, that farmers need to be smart, manage their risk, maybe have to get a little creative with some of their strategies here to work through some of this market environment that we're in currently, right?
Exactly. It's an environment that farmers have to take stock of. Just it is what it is, and now you have to decide how you want to approach this. And so we're of course hearing from a lot of people that have some hindsight wishes. They wish they sold more, did something right. It is what it is right now. We have to deal with it. The paradigm, that is the area we're in, is a shift. So we were in an area of, let's say, $5 to $6 corn, 650, and that's shifted probably to 550 to unfortunately probably $4 on the board price. If this 440 area doesn't hold. So we really have to kind of think about all the things. Can we get some basis improvement? Can we sell the carry in the market? Is there anything in the option environment that can be a benefit? If I'm going to say, hey, I'm not giving into this, I'm going to store corn. Well, how do you make money on storing corn? Do we need to sell some call options? They're not bringing a ton of premium, but there's still money to be had, or hedge higher. It's a lot more complicated than I'm making it sound. There's risk, but you need to look at all of the risk of doing nothing, the risk of being aggressive, the risk of using strategies, and have really good conversations. But we've been here before. We can get through it.
I wonder too, some of those conversations, thinking ahead to new crop as well. I wonder, if if we see these prices in this environment stick here for the next few months, could it really drastically change any acreage intentions as we get into spring? I wonder just how much we could really see any changes, Brian.
I wonder the same. So that's another big question. Right now, the ratio of price of beans divided by price of corn, so November beans divided by December corn, 2.5. That still favors planting more beans. But boy, it's kind of a race here to see what we don't want to plant. The market's telling they don't want either to increase. Is what, when you have new crop beans going down, new crop corn going down, it's not really begging for acres is the point. So things will be different this year. I will harken back to beans. I'll start with that. We're near the $12 area. It's not 13, and at 13 we were hoping for 14. We look like we've got a carryout number that might be adequate. So beans may still yet offer opportunity, especially on rallies. We need to monitor the southern hemisphere crop closely. Corn, 475. In most years where we have 2 billion bushel carryout, that might end up being a good price by fall. So I'm not saying you should jump at that, but recognize everything's relative. So if you do start making some sales in both of these crops, recognize if they backfire, you've got more to sell higher. And we know we've got bigger supplies from this year.
I know too, Brian, the wheat markets have been digesting some of these numbers from USDA. We lost a fair amount of hard red winter wheat acres in the southern plains, Kansas, Oklahoma, Texas, and that winter wheat planting number was interesting as well. I do know that these markets, a little bit of a different animal, much bigger world picture, but still digesting some of that data from USDA, it looks like this week.
Well, We are, and remember, these numbers are what they are, and then they'll change some of the next report. So I think what we're looking at in the wheat complex is I need to take a step back. I cannot focus too much here on the U.S., but we are looking at some really harsh winter-like temperatures in areas that may not have cover. Talked to a big wheat farmer in Colorado today. They don't know if they're damaged or not, but he said it wasn't ideal. He got a little bit of snow cover. Those are all things that add up, and ultimately, as we look at how things look, that is what we're seeing on the world front. The wheat market might be the sort of all of a sudden the dark horse to come roaring out of here. Exportable countries, low supplies, 15 years low supplies. So that kind of changes the view of there's not a lot of room for error elsewhere. Long-term weather patterns might be suggesting the Black Sea region is what's called a hot spot area. That is, it'll have hotter temperatures this summer. There's a few, some forecasters have a few of those spots sort of targeted for this year. So the wheat market is one that might all of a sudden lead us out of this charge, but it too has had a struggle lately. And again, I just think the speculative interest it's short. It doesn't see a reason to exit, and maybe adding to some of their positions in the near term.
We're talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing, here today on the show. Brian, real quick, some thoughts over in livestock. Cattle had a pretty good day Thursday. Have to think some of that maybe positioning ahead of this latest cattle on feed report that comes out Friday afternoon after the close, Brian.
Yeah, right. And so this nasty winter weather, which it has been, it has some effect and impact. And it looked like the market finally maybe caught up to it today, or at least wanted to factor that in. We had a pretty good solid technical close yesterday, followed through today. Really nice move. Solid closes above the 50-day moving average in February cattle. The deferred months, $2 higher today on April. Starting to see that technical strength and that recovery that we talked about, that 50% retracement still looms very large in my mind for prices as a target to get to, and you're looking about 182 on the April. Also, that's not that far away. We're $12 off the low. We got about $3 to $5 to go. $5 to go to get to 182, but back into some better resistance points. Again, I think it's more weather related, but I think what you're going to see on this cattle on feed report is placement numbers will show us probably a little bit lighter, and then you're going to see. I think there was some sort of adjustments on those reports based on when cattle went into the lot, when they came out. Weight gain was good on the previous reports. Step back a little bit. This report will still confirm tight feed numbers, cattle on feed numbers, cattle herd numbers. We'll look forward to the inventory numbers. That'll tell us some things too, but you don't quickly expand the cattle herd overnight.
Brian, any quick notes in the dairy trade for us here before we wrap it up today?
It's trying to find a bottom, and it hasn't done a good job of it yet. So we had some good activity here 3-4 days ago. It gave that back on the February contract, almost all of it back. The March contract pushed into a new low today, trading at 1605. The previous low was around 1613, so slipped under that. And we're just not seeing the activity in the cheese market. It was off today, 2 to 3 cents on blocks and barrels. So as I look at this big picture, we're still struggling with cheese prices. We use the old sort of formula: take the price of cheese and then multiply by 10. That should give you the class 3 price. $15 is what that would point to, 15 or less. So it's just a market that hasn't found a footing. We're not seeing the herds liquidate enough. It's still in a downtrend.
Well, Brian, great thoughts. And I know you got another meeting we got to let you jump to. If folks want to reach out to you there at Total Farm Marketing and ask them questions and talk to you, how can they reach you, Brian?
Yeah, the best way, Jess, is just if they would call us, 800-334-9779. Love to field questions and hear what you're asking. And then if you don't like that, you want a quick email, Brian with a Y. So Brian at totalfarmmarketing.com. And then lastly, we have a website that's got a lot of information on good resources, www.totalfarmmarketing.com.
Generous with your time each and every week. We appreciate the thoughts. Brian Doherty with Total Farm Marketing. Thanks for joining us on the show today. Have a great one. We'll talk to you next week.
All right. Thank you, Jesse.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.